gonna skip that week and go, I think it's 12-3. I mean, you mentioned that, I think it's 12-3, December 3rd. For both classes, you're gonna have Mr. Fogg here, okay? Because today we're doing accounting and bookkeeping, and then on 12-3, I think it's another accounting.
It's cash flow
management
and budgeting.
Right. These two classes, I think, are two most important classes in the whole entire program. Because your financials and your accounting is the backbone of your business. If you don't do good bookkeeping, if you don't track your expenses and track your income and place them in the proper places, if you don't have proper cash flow and you can't talk about your cash flow, how are you gonna get a loan? Right. These next two classes are essential to running a solid business. You're not gonna learn everything about this topic in the next two classes, but you're gonna be exposed to what you need to know and learn and delve into further. Okay, that's where you meet with your mentor, you correspond with Mr. Fogg about things or concerns you may have. That's when you talk to the Dallas SBDC, the Dallas SCORE office. They all have training sessions on cash flow, on accounting, on QuickBooks. Things you need to have an idea on how to run your business more efficiently and more effectively. Okay, it's not the sexiest topic. You know, my wife's a CPA, so it bores the hell out of me. You know, she taught this class in New Orleans, and I slept through that class. My wife. I'm not gonna sleep today, though, Ken. Never know. But pay close attention, stay focused, keep an open mind, and please give Mr. Ken Fogg your full attention. Without further ado, Ken Fogg, the SCORE.
Okay, first of all, I gotta tell you that my wife is also a CPA. You talk about people having sexy conversations around the dinner table. They are so sexy, we barely even remember to eat. So, by way of background, I have been a CPA in practice for over 50 years now, 50 years in counting. I started my career originally in New Orleans, of all places. So when I first met Mark, we had an opportunity for me to reminisce a little bit about New Orleans. I started out working for the biggest of the big. At that time, there were 8 so-called Big 8 CPA firms, and I was lucky enough to get a job with one of them. I spent about 13 years, 14 years with that firm and another companion firm. Actually, they weren't companions, but they were comparable size. Then I went to a smaller national CPA firm and was there for a while. And in October of 1986, I went out on my own. And I've been a sole practitioner CPA ever since, along with my wife, who is, as I say, a CPA. We've done a lot of things together on behalf of our clients that I wouldn't have been able to do on my own because her skills complement my skills. So yeah, we do have some sexy conversations around the dinner table. During the time that I've been a sole practitioner, going back to 1986, I've spent almost all of my time working with small business entrepreneurs, either working with them in their businesses or working with them in their personal financial planning and tax planning matters. And so I think that as a result of that 28 years plus now, I have a pretty good understanding of pretty much any issue that a small business entrepreneur could possibly encounter. And I want you to know that I'm here not to lecture you, but to try to share with you my professional experiences and try to provide, before the end of this evening, and certainly by the time we get done with our class on December 3rd, some things that will be impactful and meaningful in terms of how you respond to your particular business challenges. I'm not going to be able, even if I wanted to give you a how-to exercise. That's not why I'm here. What I want to try to do is to give you a sense of some of the important aspects, and Mark's already touched on a lot of what I want to try to cover over the next 2 sessions in terms of just conceptual aspects of record keeping, accounting, cash flow management, and budgeting. They all kind of go together. So tonight, what we're going to talk about are the topics of accounting and record keeping, and actually they're going to be in reverse order, because we're going to talk about record keeping first, and then we're going to talk about some accounting considerations. I think there are 5 key points that I want to try to cover tonight. First of all, and these are kind of in ascending order. I want to just throw this out. Good records substantiate information shown on the books of the organization, its financial reports, and its income tax returns. If you don't have good records, you're not going to have very good information that's going to come out of those records. Way back in the early part of my career, I learned about the concept of garbage in, garbage out. It's still true today. If you put bad information into your system, you're going to get bad information out of your system. Second key point, good records are a prerequisite for good accounting. Third key point, accurate accounting information is essential to the management of any enterprise. Fourth key point, accurate accounting information is essential for the production of reliable and informative financial information. Fifth key point, accurate accounting information is essential evidence in satisfactorily resolving issues with third parties. Now, I use the word third parties there in sort of a global context. I think most of the people that we think about as third parties might have the initials IRS. Certainly, we're all mindful of the possibility that sometime the Internal Revenue Service may come knocking on the door and asking questions, and I can assure you that you will be well served by having good accounting information supported by adequate record-keeping documentation. So with that in mind, first of all, are there any questions so far? Anything you want to ask? By the way, this is not a lecture, so if any questions pop up, anything you think about, just raise your hand. I'll try to acknowledge them as we go. Hopefully these will be questions that all the group will benefit from participating in one way or another. And we'll try to make this as interactive as we can. I'm hopeful that it'll be interactive because I'm really not a speaker. I'm a facilitator. So let's try to keep this lively and as what's the word I want to use? Exciting as possible. Okay, first of all, with regard to record keeping, and maybe this is something that's stating the obvious, but I think it's worth stating. Any organization, first of all, ought to figure out what it's going to be doing. What is it doing? And what kind of records are necessary in order to be able to facilitate the day-to-day information gathering that relates to that particular organization. If you're selling a product, there may be certain kinds of information that would be extremely important. If you're providing a service, there may be other information that would be extremely important. So whether one way or the other, you're either going to be selling a product or you're going to be providing a service. It might be lawn care, it might be a hairstyling shop, it could be a restaurant, which is a combination of goods and services, by the way. Mostly service, right? And so one way or the other, you have to think about what kind of an activity are you conducting. And as I say, I may be stating the obvious, but I think it's worth stating. If you're selling a product, I think the first thing you need to be thinking about is developing a system to keep track of your customers. If you're serving or selling to customers who are recurring customers, it might be a good idea to have some kind of a customer database. Doesn't necessarily have to be something that's computerized. You could have your list of customers in a handwritten notebook somewhere, but some way or the other, keep track of who your customers are so you can contact them. So that if you're going to be offering specials or whatever the case might be, you have a distribution list that is a great place to start in terms of letting your customers know that there's some special deals that are coming up. If you're buying products from outsiders, from vendors, it's a good idea to have vendor records where you keep track of your vendor's name, location. Probably there's some kind of, in this day and age, a numbering system that helps you to be identified by your vendors, and so it would be a good idea to try to keep some kind of a file on who your vendors are and how you can get in touch with them, and probably the key people in those vendor organizations that you can contact when you have special needs. If you're selling product, you probably have inventory. Now, inventory is, in this context, is the physical existence of goods. It's not necessarily a record at this particular point in time, but if you're selling products, then you really need to have some kind of a record of what products you're selling. One of my examples that I've used from time to time is back many years ago. One of my clients was in the fastener business. It was in the bolt, nut, and screw business, and they had over 50,000 different products in their inventory. And I was just darn glad I didn't have to go out and count that stuff. But anyway, it was a data management exercise, just keeping track of all these various products that they had that were part of their everyday inventory, and keeping track of when they were going to be running out of things. So that's a really important aspect of any enterprise where you're selling products. You never want to run out of something that your customer wants. If you do, you're in trouble. One of my wife's pet peeves, by the way, is she does a lot of shopping online. And the last thing that anybody ever do with her is to send her a message saying that her order has been back ordered. Because that is like telling her that there really isn't Santa Claus. So inventory records are extremely important from a business management perspective. We'll talk a little bit about the accounting aspects of inventory later on. If you have people that work for you, one of the important things that you have to do is to maintain adequate and informative personnel files on all of your employees. You have to have their contact information. You need to have their Social Security number on file. You probably need to have something like the person to contact in the event of an emergency. These are all aspects of the employee record keeping function of any enterprise where you have employees. If you operate out of a fixed location, whether it be some leased facility or whether it be your own real estate that you own, you need to have adequate records with regard to the physical property that you're using as a base of operations. If you're leasing your space, then you probably are going to have a copy of your lease. And each time that lease is amended, each time it's renewed or extended, then you would want to maintain that kind of documentation so that if there's any question about the terms and conditions of your lease, you can immediately go and refer to the lease and go talk to your landlord. If you own your own facility, then you're certainly concerned about maintaining records that demonstrate that you do own that facility, because one day maybe you might want to sell it, and you certainly wouldn't want to run into any title issues. So the last thing that I think is that I want to try to emphasize, as far as actually this applies to both selling goods and providing services, is data storage considerations. If you have your records on a computer, it's a good idea to have a backup computer file stored off-site if you possibly can, because if you have a flood or a fire on your premises and your computer records are destroyed and you don't have a backup, you've got a lot of a lot of work ahead of you to try to reconstruct your financial information. If you maintain your records in some manual format, it would probably be a good idea to at least think about having possibly a duplicate set of records somewhere, not a second set, but a duplicate set of records somewhere offsite, so that you're able to retrieve that information in the event of some fire or flood or other casualty that damages your existing records. One of the more challenging assignments that CPAs get from time to time is an assignment to reconstruct records from whatever information might be available in the case of a physical disaster. I'm sure that there must have been some accountants in New Orleans, for example, that were really busy after Katrina, trying to help insurance companies and their customers figure out what kind of business interruption insurance claims should be filed and processed. So having access to information at all times is really a crucial part of the management of any business. Now let's skip to enterprises that provide services. And I know we've got kind of a mixed bag in here, maybe more service organizations than merchandising organizations.
What was the name of it? What's the name of it? Say it again.
We probably have more, this is on the, I don't know where you are, but it's just on the second page here. When you're providing services to customers, I think it's equally important to maintain records of who your customers are, how you can contact them. If you're doing work that involves a follow-up billing process, which is the way I work with my clients, I really need to know what their address is, and I really, even more importantly, need to know if they've changed their address, because I don't want to send a bill to an address that's no longer an active address for a client.
I have a question.
Phone numbers and these kinds, yes ma'am.
Do you use any particular type of database or client management software to manage your client database?
Are you asking if there's software available? There is, but I couldn't begin to tell you what you should look at. I would say that there are probably any number of software programs out there, and I would encourage you to look at something, maybe try it on a trial basis and see whether or not it works for you. The one thing that I try to emphasize when I'm talking to clients is don't overmanage your business, because you only got so many hours in the day, and it's a lot better to work smart than it is to work hard sometimes. And so, to the extent that you can find a tool that serves your needs as closely as possible, that would be the tool that you probably should use. It may be that in your particular situation you could get by with an Excel spreadsheet that has that information on there. Excel has a lot of features in terms of being able to sort information by in some alphabetical order, or maybe you can sort it by size of the customer that you're dealing with. If you have an array of customers, some are high dollar customers and others are relatively low dollar customers, you could sort the information by level of service that you provide. So that's one tool that I think, if you're familiar with Excel, would be a good place to experiment with. If you get in there and you decide, well, this isn't really giving me all the information that I want, then perhaps you go to the World Wide Web and see what may be out there as far as something that's a lot more oriented towards a database rather than just entering information and sorting it through the sort commands. Does that answer your question?
Yes.
I think it's a great question. If you're providing services, you still should keep track of your vendors by maintaining vendor files, so that you know who to contact when you need something. In my practice, the guy that I need to call most often is the guy that fixes printers. And I practically have him on my speed dial. Great guy too, I might add, but he's just, but it's, in our situation, we work out of our house, and about the only thing there's only two things that can really go haywire. One is the printer, and the other is the computer. Unfortunately for us, the computers are pretty maintenance free. Printers, not so much. Once again, if you have people that work for you as employees, you need to maintain personnel records. That you have all the vital information as to their contact information, their person to call in the case of an emergency, their social security number, anything else that relates to the employment relationship that they have with your company. Property and leasehold records would be the same as we talked about with regard to a business that's selling merchandise. And data storage, the same thing. Now let's talk a little bit about, before I go on, any questions, comments? I'm going to ask the question, is this helpful so far?
Yes.
Is this the kind of information that you think is really meaningful? Or am I just up here spouting off about things that are not helpful?
We haven't
It's really-
thrown tomatoes at you yet.
Well, and no, I tell you what, if you want to throw some of that brisket.
No. Don't throw the food.
Even
Don't throw the
with
food.
your barbecue sauce on it, that'd be just fine.
That'd be okay, huh?
Okay.
The
So
reiteration.
no tomatoes yet?
Yeah.
Okay. All right. Again, this the presentation that I'm trying to make is something that really has just come to my fertile imagination from all the experience that I've had over the years. And I really didn't have enough information about the group that's here tonight other than to see names on a roster to know exactly who my audience was going to be. So I'm trying, by necessity, I have to make this a little bit generic. But hopefully it's going to be meaningful for everybody and nobody's going to feel like they've been left out.
Ken, I have a question. In terms of keeping records, I have a bad time with receipts. Do you have a process to keep your receipts? They're in my purse, they're in my car, they're...
Well, they should not be in those various places.
We know.
That's your problem.
They should all be in one place.
they're-
And if you want to talk about receipts, I'll try to answer your question as best I can. First of all, I think that when you keep actual receipts, whether they be charge slips from going to Walmart to buy supplies, or if you go to Office Depot or wherever you go, you're going to get some kind of a charge slip. They're trying to get away from giving you something when you're in the store. They say they'll email it to you. Say, I want it now. I want it now. So I take that charge slip, and when I get home, I put it in a place that where the charge slips are accumulated, and then when the bill comes in from Visa or MasterCard, whichever credit card I may have used to purchase that, then that charge slip gets matched up with the line item on the bill, and after the bill is paid, then all those charge slips get stapled to the statement that comes from Visa or MasterCard, and that gets filed in an expandable folder that has lots and lots of slots in there. They're all alphabetized. My wife is into alphabetizing everything, and that's a good thing. So that's how we keep track of things like charge slips. Now, if it's a purchase for cash, you guys are really going to love this. We keep track of every single penny that goes through our banking records over the course of a year. That's because we can. We're accountants, for goodness sakes. But what we do is if I go to Office Depot and I need to buy some legal pads or some file folders, and I'm gonna pay cash for that. I get a cash register receipt from Office Depot, and I take that home, and I put it with other similar cash register receipts, or sometimes it's not a receipt that I get from a vendor, it's a receipt that I create at the time that I actually expended the cash, because I didn't get a receipt, but I make a note of it at that time.
So you make up a receipt?
I make my own receipt.
Okay.
I keep all this together. Now, eventually, I'm gonna run out of cash, right? So I go back to the ATM, and I get, let's say, $100 from the ATM. I need to have $100 worth of receipts to match up with that $100 that I just took out of the ATM machine. And so at the end of, when that particular $100 has gone back into my walking around money, then I have $100 worth of actual receipts that document that expenditure. And so these then get filed away in another place where we keep track of all of the actual cash expenditures that we make. And eventually, and it's usually pretty much Johnny on the spot, those transactions get recorded in our bookkeeping system. And that's how we do it. Now, I said, we're both accountants, we're both bean counters. We're somewhat anal in how we keep records. So what works for us doesn't necessarily work for somebody else. But it really starts with having a systematic process of keeping things in the same place all the time. Yes,
So would it be fair to say that you keep up with every nickel and dime that you spend regardless?
would it be fair to what?
To say you keep up with everything that you spend regardless if it's out to dinner, or taking a client out, or going to Walmart, you keep up with every single thing.
If it's personal, we keep track of all that too.
So you,
Not just-
business and personal.
Not just business, but business and personal. We keep track of everything. And I know that's a real hard pill to swallow. I won't call it a bitter pill.
That is big.
But but we do it because we can.
Yeah.
Because we have the training and the discipline to be able to do just that.
So in other words, if I took myself out, say I went out to dinner, I spent $30, just take myself out. Do I need to keep up with that?
Well, that's up to you.
Well, I'm saying, would that make sense to do that if I want to just keep up with everything?
Well, yeah,
and
and I'll tell you why, and this is really not part of this class, but you brought it up, and I'll tell you why I think it's important. I've known people for a long time who very much off the cuff say, oh, I know exactly how much money I'm spending every year. I know exactly how much that is. And I'm not patronizing Rochelle because she happens to have this particular profession, by the way, but I say, oh, really? You know how much you spend? That's interesting. The only way that we know how much we spend over the course of the year is because we keep track of all of it. We know to within $5 of how much money went through our banking records over the course of a year. Sometimes it's even less than $5. And so we don't spend a lot of time poring over this stuff after the fact. But at any given point in time, if we want to go back to our personal records to find out how much we paid somebody for something, or who we paid, for example. Well, we have this need for somebody to come out and fix an air conditioner. Who did we have last time? We go back through our records and find out. And we have all kinds of opportunities to do this, and it's amazing what peace of mind you have when you have that kind of a record keeping system. I don't want to steal Rochelle's thunder. Anyway, yes, sir.
They have a machine now that you can buy, a neat machine that you can run just put your receipts in, and it'll document them and organize them at the same time.
It's called a what?
Neat, N-E-A-T.
That's for shaving your legs from meat.
Huh?
Well, that's for shaving your legs.
Eat them up. It's
Shave your legs. You get stuff confused.
It's like an affordable affordable scanner.
Yes,
Right,
it is.
affordable
But it
scanner.
has the, but it also has the capacity to somehow or other read this data and
That's
classify
exactly
it.
right.
Yeah.
Yes, it is exactly right.
I wish I didn't have
Has anyone
that.
Yes.
used it in here?
I have the old machine, it doesn't do all of what the new one does, and I'm gonna get the new one, because it has the ability to organize this stuff and really keep it.
So it can organize it for yourself, keep people having to do it, basically what you're saying?
You have
Yeah.
to program it to tell, you have to tell it where to go, so once you set it up and say, like program it to say like Walmart, or
Yeah.
you organize it and tell it where to go, and then once you scan those receipts in there, then it's gonna shoot it into those different files in order to work.
So it has to be set up more or less?
Yeah, so you
You
have
know,
to
you
kinda
just can't
set
just
it up.
buy it off, just throw
No,
it,
no,
okay.
No, it's not that smart.
It's not
No.
that smart.
I mean,
Is
yeah,
it
yeah.
edited
Yeah.
Well,
after the fact,
now,
or is it just a
I'll have to
scanning,
confess
or is it
that
just-
my wife and I have been going through this process since long before there were all these nifty time-saving tools that are out on the market today. So, and being creatures of habit, we continue to do things the same way we've always done it. But as, the point I really wanna try to make is that you would be amazed at what kind of information that you would get just by going through this exercise, maybe just for a period of time. But I don't believe that there's anybody walking around on this planet that intuitively knows how much money they spend over the course of a year that just vaporizes.
Yeah,
People
I do
cannot-
that, I do it a lot, some stuff I keep up with, you know, we have a bit, you know, when I go out to eat or buy myself clothes, or I don't keep up with that, and I probably should, but in my business, we pretty,
Well, it's absolutely essential that you do it in your business, and that's why we're here tonight, and that got us right back on topic, so we'll just move on from there.
okay.
Okay, so one of the topics that I want to try to cover a little bit is just to talk a little bit about a system of controls and procedures that should be installed, if it's not already installed in the business, it certainly should be part of the way you approach the management of your business on an everyday basis. One of the things that I think that or actually there are three objectives that can be accomplished if you have a good system of controls and procedures. One of those is the clarity of duties, responsibility, and lines of supervision. If you have an organization where you've got people that are working for you, it's really important in my mind to make sure that those people understand exactly what it is they're supposed to do, that they have the authority to carry out the tasks that are assigned to them, and that they know that they have somebody they can go to talk to about how they can do their job better. So it's a system of supervision and review and follow-up that I think provides for a much happier workplace. So having a clearly defined set of duties, responsibilities, and lines of supervision, I think is essential to any business that involves other people. If you're working as a sole proprietor in any kind of business where you don't have employees, you don't have staff, you work strictly on your own, then you don't really need to have this kind of formal structure as far as supervision, review, and follow-up is concerned. But in most cases, even if you're working all by yourself, there are going to be times when you need help. And when you need help, you probably know where to go get it. But I think at that point in time, once you engage somebody else to assist you on a particular job, it's really important for you to be able to explain what the job is, what the responsibility to your customer is, what your expectations are as far as what they're doing, what their expectations of you should be. These are all part of this idea that there needs to be at least some formal attention to the establishment of clear lines of responsibility. A good system of controls and procedures will also minimize the risk of loss due to theft, fraud, embezzlement, or any other thing that can happen because First of all, when people have a sense of order and supervision in their workplace, there is also a sense of accountability and behavioral responses that are intended, among other things, to try to create an environment where people are assured, first of all, that they're trusted, but even more so, that they're not going to be led into temptation where they might have an opportunity to do something that they wouldn't otherwise do, but nobody's looking, so I'm gonna stick my hand in the cash register. I know that's especially a concern in restaurant business. I know that. So the idea is that you want to try to establish some kind of a control environment so that people who are in positions where they could do something dishonest are well advised that somebody's watching them. Not because we don't trust you, but because we just simply don't want to give you the temptation that would otherwise allow you to do something that you really don't want to do. Third objective of the system of controls and procedures is to facilitate the preparation of reliable financial information. If you have people that are working with you in your organization and there's a variety of duties that involve the handling of documentation that relates to the financial affairs of the organization, then you really need to have a system in place that clearly defines what each one of those individuals is doing as far as that particular task is concerned, so that the information that flows out of their activities is information that can be relied upon for purposes of, first of all, recording the transactions in the financial records of the enterprise and then reporting on those transactions. So if people are just willy-nilly doing whatever they feel like doing on a day-to-day basis, keeping their records kind of like Rochelle does, then you're going to have chaos. And it's going to be a very difficult process to be able to take all that chaos and turn it into something that makes sense. Next item on my outline is an item that refers to internal reporting and management information. And essentially what that means to me is that you try to create an environment where your employees feel totally comfortable in keeping you informed about what's going on. When you're not watching them, they should still be feeling a sense of loyalty to the organization and to the owners of that organization, to be fully forthcoming about anything that happens in that organization that the supervisory people should know about. How you go about doing that, I think, really starts with the kind of relationship that you establish with each of your employees. And I know that can be hard, especially if you have a large workforce. Sometimes it's hard even when you have a small workforce, because I think there's a tendency for everybody to just get so busy that they don't really have the opportunities or don't take the opportunities to try to have the kinds of internal communication that really makes sense in a given situation. Some of the larger small businesses that I have had the opportunity to work with over the years would have periodic staff meetings. And I don't know whether or not those periodic staff meetings were very effective. The intent was certainly there, but sometimes staff meetings end up being opportunities for everybody to wave their own flag and really don't accomplish what I think is necessary, and that is to facilitate the building of a team, of building a spirit of everybody in this organization is here for one reason, and that's for the betterment of the company. And if the company is successful, then we're all gonna be successful. How you can instill that and monitor it and cultivate that kind of esprit de corps is something that's probably an individual thing, but I would certainly encourage all of you to be thinking about that. Yes, sir.
Experience. When we first started, we would have these weekly meetings every week with the staff. And we had several businesses then, we would bring everybody in, to one spot. Sometimes we would take them to lunch at the dinner and have these meetings and, you know, just trying to establish a rapport of togetherness and that we're all trying to build the business. And when the business is built, then we all gonna profit because everybody will get, you know, higher pay. We even gave bonuses. Man, let me tell you, that was one of the worst things we could have ever done. Those bonuses caused people to fight. I mean, everybody was backbiting, backstabbing. It was crazy. So we had to cut all that out. And then we kept going with the meetings, and I don't know, it just went, we had to fire everybody.
Okay. At the end of the day,
So happy endings, we know, it's not happy endings, fire
You don't think though, if maybe set up a little bit different, then maybe it wouldn't have happened? Maybe based upon seniority, because that's what they did in my company, and we didn't have that problem because some had more seniority than others, and you didn't have none of that bickering and back, because, you know, it was based upon, I'm just throwing this out. We had that, and then, loyalty.
We tried different things.
Yeah, loyalty,
Yeah.
coming up with creative ideas, made them worthy, you know, made me worthy, whoever it was, you know, if I come up with a different idea about something in the company, you know, so.
And
do
we
you think-
promoted, we promoted that, we promoted people to be creative and come up with different ideas for the company. And if someone came up with a great idea, then we would incorporate that idea, and everybody else would be mad, because they didn't think of it, because we gave that person a bonus for that. It was just.
Yeah, the wrong people.
But the thing in the hospitality industry, and this is critical, where do you get the employees?
And where do you get the right people?
It's not just the hospitality industry, it's just, it seems like every workplace has the same kinds of challenges you do. I'll share with you my thoughts when I started my CPA practice, my personal entrepreneurship back in 1986. I said to myself, if you get from now until whenever you can't do this kind of work anymore, without one, having any employees, two, having a landlord, or three, having a banker, you can consider it to be a successful undertaking. And so far, so good.
Yeah.
The only time that I've ever had a landlord was when I was practicing in Southern California for a while. I was officing, not as a tenant, but I was officing with another CPA practitioner, and I found out that some space was coming up available in this particular office complex. So I talked to the landlord, and we worked out some lease terms. And within probably less than 2 weeks from the time that I signed the lease, the landlord came to see me. He says, Ken, he says, you know, I've got a lot of stuff going on in my financial world, and I need somebody to help me. Would you be available to just kind of take on our account? And I said, sure. After that first full year of activity with this client, we ran some numbers, and it turned out that we collected more in fees from this client than we paid in rent. So I didn't really count that as being something that was part that where I broke my promise to myself when I said I never wanted to have a landlord, because this landlord was a wonderful client, and we had a great relationship, and it lasted for a considerable period of time. And over that period of time, I benefited from being in his space. Let's put it that way. We wouldn't have had that work if we hadn't been there. So you never know.
I see I'm in the wrong profession then.
No, I imagine you're in the right profession. And that's a topic for another day. If I get to come back for a third round, we'll talk about life experiences and how we all ought to be able to find our niche in life and never look back. But that's a topic for another day. But anyway, I really feel your pain when you talk about some of the backlash that you get from well-intended personnel administration strategies that you try to implement that's intended to do everything that you want to do to improve the workplace environment. And you get all this backbiting and sniping and jealousies and complaining, and that's why I'm happy I don't have any employees. Yes, sir. Did you have something else you wanted to add?
No, I'm done.
Okay. All right, next topic, external reporting. And I'm using the term stakeholders here because I think that's kind of a generic term that defines owners of a business. You might, if you're a sole proprietor like I am, I'm the stakeholder. If you're operating in a limited liability company, you might have multiple members of a limited liability company. Those are stakeholders. If you're operating as a corporation, you have shareholders. They're stakeholders. So I'm using stakeholders as a generic term that talks basically about the owners of the business. They have a vital interest in receiving financial information. You as the owners of the business have a vital interest in receiving financial information that's meaningful, that's relevant, that helps you to manage your business. And in order to pass that test, that information has to start with reliable underlying documentation. If you have a relationship with a bank, bankers are from time to time ask for financial reports. And when they get a financial report, they would like to be able to read that and have some level of comfort that the information that's in that report is reliable, that it's understandable, that it gives them a better ability to evaluate how your business is doing to the extent that they need to. And I don't think there are too many bankers around that really have any desire to try to manage somebody's business, but they definitely want to manage their debtor-creditor relationship with you. And in order to do that effectively, they need to be getting information that they feel comfortable with and they can rely on. So there's another good reason to be thinking about the integrity of the records. The last category of external reporting is the IRS and other tax authorities. Now, most of us would like to think that when we file our tax returns, whether they be payroll tax returns or whether they be income tax returns or sales tax returns with the appropriate tax authorities, that those returns go in, they get processed, and we never hear anything. And that's a good thing. But sometimes there's some feedback from somebody at the IRS or somebody at the comptroller's office or somebody who is involved in looking at those tax returns. And if they have questions about the information that's in there, then you certainly want to be able to convince them very quickly that the information that you reported is correct. Sometimes there are audits involved, and sometimes it's a relatively inconsequential inquiry about a particular matter. And I'll share with you a personal experience. A couple of years ago, I got a notice from the IRS that my reported income on my Schedule C, my business income, didn't match up with the information that was provided by third parties. And I reacted just like a taxpayer would. I was furious. My hands started to sweat. I couldn't wait to get to my computer and fire off a nastygram to the IRS saying they had to be mistaken. But instead, I went back to our immaculate files and I looked at the packet of Forms 1099 that we received from our clients who reported that they had paid fees to me during that particular year. And I found that Form 1099 in there from this party who has been referred to in the IRS notice. And I looked at the 1099 And I saw the number on there that I had reported, but I then realized for the very first time that fee that was reported on that 1099 was reported in the wrong box. And so, when the IRS got my tax return, they accepted the revenue number that I had reported as being gospel, but they didn't, but then they said, well, this number that was reported in this wrong box was supposed to be reported somewhere else on my personal tax return. So I very patiently sat down and I wrote a letter. I then attached a copy of a report that we were able to produce from our bookkeeping system that showed the entire amount of income that I had received during the year from my CPA practice. And I highlighted on that report this exact number that they were looking for. I sent all that information in. And about 4 months later, I got a letter back from the IRS saying they'd accepted the information that I provided and no further action would be taken. So anyway, there, even in what I would say would be the most ideal reporting environment that you can imagine, things come up. And so having access to the information that we had in our files allowed me to very quickly figure out what was going on, and I won't say quickly, I'm not a real speedy typist, but very quickly, in my scheme of things, respond and get this matter resolved.
How long, from a business point of view, do we need to keep our records, just in case something like that comes up?
The statute of limitations typically for federal tax matters is 3 years from the time you file your tax return. If you should, for some reason, not file on a timely basis, you might end up with a longer period that you need to be concerned about. But generally speaking, it's 3 years from the time you file your tax return. So we're now in 2015, getting ready to go into 2016. You could probably dispose of any records that you have that are dated in 2011 or prior, just as a general premise. The statute of limitations might be a little bit longer on sales tax matters. I don't know exactly what it is there. I'm not completely up to speed on all of the rules of the comptroller's office, but I would say that it's probably comparable to what the federal rules are. If it's something that pertains to property ownership, if it's something that pertains, let's say, for example, if you're leasing space from a landlord and you have a lease that has been extended and modified over a period of time, it'd probably be a good idea to keep all that lease documentation for as long as that particular property has been leased. If you own the property, you would probably always want to keep some file that has everything related to the ownership of the title of to the property or whatever it might be. But other than that, if it's transactional, if it's banking records, anything that is a part of a periodic reporting exercise, such as filing of tax returns, I would say 3 years is probably okay. Now, having said that, I will tell you that our typical record retention policy in our household is we keep things as long as we've got space to keep them. When we run out of space, then we start purging the oldest stuff, and it could be pretty old, depending upon what it is that we're trying to get rid of. I think it's human nature to hold on to things. Maybe it's human nature to hold on to those kinds of documents because maybe there's some memories in there somewhere. But if you ever went back and looked, you'd say,
I've got some I've been keeping
it.
for about, I still got 10 years. I still got them. You know, I'm like, need to do something with this stuff because before I retire, I still got records where I file and stuff like that. You know, so.
But I think if you have it in a place where it's not in your way and it's really not taking up space that you could use for something else, then let's face it, it's easier to hold on to it than it is to go through and make decisions about what to throw away.
5-minute break.
Okay.
5-minute break.
Take a break.
All right, right, guys.
Okay, so we're gonna start with, this is probably about the third page of the outline, the topic, setting up a bookkeeping system. Where, once again, it's a question of what is your organization going to be doing? Is it gonna be selling a product, or is it gonna be providing a service? If you're gonna be selling a product, you have a certain array of bookkeeping considerations. Among other things, are you gonna be operating out of a fixed location? Or are you gonna be doing online sales? I think we have at least one person in here whose business is mainly online sales at this point, is that right? Absolutely. So how you operate has a bearing on what kind of bookkeeping system you need to be thinking about. And by that, I mean just beginning to think about the kinds of activities and transactions that you're gonna have as you operate. If you're in a fixed location, you're gonna have things like rent maybe, if you're renting, or you're gonna have certainly a lot of occupancy costs if you happen to be the owner of the facility. You have online sales, you have one set of considerations in terms of how you keep your sales records. If you're gonna be selling on credit, you have a different set of considerations that may overlap and they may not. If you're gonna be selling with credit cards or with PayPal or some other type of payment facility like PayPal, you're gonna have to be thinking about how that's gonna work in terms of just being able to track the flow of dollars. If you've got product sales, most likely you're gonna have sales tax liability, and so you need to be able to set up your records so that you can keep track of your taxable sales. If every sale is taxable, well, that makes it kinda easy. If every sale is, yes ma'am.
I was trying to let you finish your statement, but I had a question. Okay, so speaking of the sales tax, what if you don't charge sales tax? I was told you still need to get a sales tax ID, but what can only charge sales tax?
If you're not charging sales tax on your pies, are these pies being consumed on premises or not?
No.
Carry them out?
Yes.
Don't know the answer off the top of my head, but you might be exempt.
That's what they told me.
And what I would suggest you do, if you're not sure, there's a place where you can go on the comptroller's website.
They told me I was exempt because I'm not slicing anyhow, once you start slicing and selling by the slice. But they still made me go and get, before I got, my food, lights with the health inspection, I still had to get a sales tax ID, but I don't use it. But I'll charge, I don't know, but just say.
Well, I think you're exempt if if this stuff is being carried off the premises, because I think that's one of the exempt food things. Don't hold me to it, but I'm thinking that that's true. On the other hand, if you're selling by the slice and it's consumed on your premises, that's a whole different set of rules. That's like you might as well be in the restaurant. Well, not really, but you could possibly be in the restaurant business if you're selling your pie by the slice on your premises. Yes, ma'am.
So if it were a catering business, because if it's catering, is that more of a service?
Well, it is, but you're also selling, presumably you're selling food as part of that service.
Right.
The thing about the Texas sales tax laws, folks, is that they are so fuzzy that if you have any doubts whatsoever about what you're doing, what I would encourage you to do, and this is you can do it on a no-name basis, pick up the phone, call the comptroller's office, and ask to speak with somebody that can help you to resolve the matter. In your own particular circumstances, you don't have to tell them who you are. Just say, I've got this business and this is what I'm doing. Am I subject to sales tax? And I think you'll probably get an authoritative answer. If you don't like the answer you get, you still have the opportunity to go talk to somebody else and say, I've heard this from a reliable source at the comptroller's office. I don't like the answer. What do you think? And there are probably at least a dozen or so occasions that I've had since I've been back in the Dallas area, which is 8 years now, and only a dozen occasions, because I don't really deal with a lot of sales tax issues, where I've gone into the actual Texas sales tax law and tried to wade through that. It's like going through a swamp. It's very, very fuzzy, to say the very least. But the problem, and this is the practical problem that I think is a takeaway from this evening's discussion. The cost of getting into a situation where they nail you for not paying sales tax that you're required to pay can be so severe that they'll put you out of business.
Right.
And that's what you want to try to avoid. If you have any doubts at all, start with making a phone call to the comptroller's office. If you don't like the answer, then talk to somebody who's a competent tax advisor in the area. You might even be able to call me, and I might even give you a freebie. No, but it's that confusing. And I know we have landscapers in here. When we have where we live, and because of the fact that we are fairly busy during the course of the day, we decided that we were going to have an arrangement with a landscaper, a person, or a company that was going to take care of our landscaping. First time we got a bill, there was a line item on there for sales tax, and I was absolutely flabbergasted. I wouldn't have thought that you would be billed sales tax on landscaping services, but that's the way it works in Texas. And I went back after I got the bill and talked to my contractor and did some research, and sure enough, there it is. So it's just it's a very, very comprehensive, complicated, and not very well defined area of the law, and the consequences of getting nailed on something are just, they can be devastating. They can literally put you out of business. So be careful, be thorough, and be in compliance. The thing about sales taxes, and I'm not going to beat this to death, but the thing about sales taxes is that if you tell your customers that they're subject to, it's actually a tax that's imposed on the consumer, not a tax that's imposed on the business. So if you tell your customers, I got to collect sales tax on this particular sale, they shouldn't complain about it, because that's the law. If that truly is the law. So it's not like you're trying to cheat them. You collect the sales tax and you pay it up to the comptroller's office. You fulfilled your responsibility. In your case, if you don't have to collect sales tax, they probably still want you to file that sales tax return and say you didn't have any taxable sales.
But how do you buy products? So like, I shop at Restaurant Depot, that's like a place here in Dallas. You have to have like a sales,
A resale certificate in order to buy the product.
Maybe I just need to call it controller, because I'm in question
So
about a lot of things,
So your suppliers are trying to collect sales tax from you on the, or that, I would think that would be, a lot of that would be tax exempt as well, because it's like flour and ingredients and things like that. Are they subject to sales tax?
No, I don't pay sales tax on them.
So, but you do have things that you buy that eventually go into your pies that would be subject to sales tax, like pie plates, for example. And so.
I just pick up the phone and call you up.
But I think you can submit a resale exemption certificate to your supplier so that they don't collect sales tax, even though you may not have to collect sales tax on what you're actually selling because it's going out the door, including the pie plate. But once again, that's just off the top of my head.
So all services are not tax exempt, Dan?
I shouldn't say most. There are some services that are exempt from sales tax and other services that are not. I'm a CPA. I don't have to collect sales tax on my services. Lawyers don't have to collect sales tax on their services. Doctors don't have to collect sales tax. With virtually all the professions who happen to be regulated by the state in one way or another, seemingly are exempt.
We had a concrete company some years back, and that was a service we didn't have to pay sales tax on. But then when I have people come and do certain things at the business, which are services, like care for the floors and stuff like that, they charge me sales tax.
And I think they're required to.
Yeah, well, and you know, I mean, I
I
was kind of upset about that.
It's extremely fuzzy. And one, I was talking to somebody one day about the fact that CPAs and doctors and architects and lawyers don't have to pay sales tax or collect sales tax on their services. I said, you know what, it may just be that we have a stronger lobby in Austin than some of the other service organizations. I don't know, I don't participate in that, I'm just speculating.
Right.
But it's all over the map. And more services are being subject to sales tax. As a means, frankly, for the state to be able to get more and more revenue. What they do with it, that's a topic for another day as well, but there's a constant pressure on state governments to collect more money. And so, over time, the legislatures pass additional laws that essentially drag more businesses into the network of revenue production. That's kind of the way life is. Okay, let's move on. The clock on the wall says I'm going to run out of time before I run out of things to talk about, and I don't want to do that. One of the things that clearly is important as far as a business that's selling product is a procedure to keep track of inventory. I mentioned this earlier in the context of just making sure that you have records of what's actually in your inventory. But it's also a matter of keeping track of inventory for purposes of knowing what your product is costing you. One way or the other, if you don't actually have a physical inventory that you're showing as an asset, and you're probably not required to because there's a relatively large exemption for businesses who have less than several $1 million of revenue. You don't have to account for inventory, but you still should have the means whereby you keep track of what it's costing you. Very detailed costing records so that you have the ability to put those costs into your accounting system and compare those with what you're selling the product for, and see whether or not you're selling the product at a profit or whether you're selling it at a loss. And maybe you know that just because you can see from your banking records. But the need for adequate accounting records on inventory, I think, cannot be understated. If you have third-party suppliers, you certainly want to be able to keep track of the information related to payments to those suppliers, because there's a good possibility at the end of the year you may be in a situation where you have to issue 1099s to those suppliers, which would be similar to the story I described about my personal situation. And so in order to be able to issue those forms 1099, you have to be able to capture the information as to what you paid on a supplier by supplier basis. And most computerized bookkeeping services that I know of have a feature in there where you can actually classify and code transactions so that at the end of the year you push a button and basically you get your 1099 reports. And it's something that if you're going to have computerized books and records, you should probably look into that particular feature. The Form 1099 reporting process is it's been around forever, but it's a tool that the IRS uses these days to try to basically put the burden on businesses to facilitate the reporting of income by people who are being paid for services that they render on behalf of those businesses. The perception at the IRS level, understandably, is that people cheat on their income taxes. I don't know where they got that idea, but that's their perception. And so by putting a burden on businesses to report the amounts that have been paid to their vendors who fall into certain categories, they essentially have shifted the compliance burden from the IRS to the business community. And that's the way it is, and if you don't comply with those reporting requirements, you can subject yourself to penalties, and that's not a happy place to be. So keeping track of payments to third-party suppliers, I think, is something that again, is an essential aspect of your accounting system. You've got a sales force. First thing you have to decide is whether your workers are employees or if they're independent contractors. And I will take this moment to tell you that that is also shifting sands. And it's shifting more and more towards the determination that workers are employees rather than contractors. There's probably a variety of reasons for that, not all of which have to do with tax collection. But there's certainly a movement in that direction. There used to be something like 13 different criteria that were considered, and you didn't have to pass all 13 of them for an individual to be treated as an independent contractor. I don't know what that number's dropped to, but it's not anywhere near 13 anymore. So if you're talking to someone about becoming part of your workforce, you need to certainly know where you stand as far as whether you're going to try to treat that person as an independent contractor, or if you're going to have to bite the bullet and put them on the payroll. If you already have payroll in your business now, then it's really not too much of a stretch to add an additional employee. The people that I've talked to, particularly SCORE clients that I've talked to, many of whom are just getting started in business, really don't want to be bothered with the hassle of keeping track of all that employment stuff. They don't want to have to be collecting withholding taxes and paying them up on a very religious and frequent basis. The easy thing to do is to just simply treat this person as an independent contractor. You issue a 1099 at the end of the year, and the recipient of that compensation is responsible for reporting all his or her own taxes. That's maybe an area where everybody could perhaps be in agreement. Yes, this is what we're going to do. One story I heard about was a case where there was a clear-cut agreement between the payor business and the payee individual who was working for that business until the end of the year came around and the individual received his Form 1099. This was a relatively young individual who was maybe still a college student. But anyway, he says to his mom, "Mom, I've got this Form 1099, what am I supposed to do with this? It looks like I gotta pay self-employment tax." And she said, "I'll take care of it." So the way she took care of it was she filed a complaint with the local office of, this was not in the state of Texas, but it was the equivalent of the Texas Workforce Commission. She filed a complaint with the unemployment office, which then resulted in a follow-up back to the payor of this so-called independent contractor fees. They interviewed the payor and made a determination that this was really an employment situation and not an independent contractor situation. They imposed the state unemployment tax and related interest and penalties on this particular payor, and then gratuitously let the IRS know what was going on. So even though you might have an understanding, that doesn't necessarily mean that it's a foolproof arrangement. So it's, again, as a cautionary note, all I can do is encourage you to just be really sure that you're on solid ground when you make decisions about whether or not you're going to have employees or whether you're going to try to have independent contractors. Any questions on that?
That's what we do. We have, I call them subcontractors. We don't have employees. I use contractors. You know, I got guys that work under me, but they're subcontractors, but they use my equipment. And at the end of the year, that's what we do. We issue 1099. So far, it's been.
You say they use your equipment?
Yeah, they use my equipment.
Do they drive your trucks?
No, I drive a truck.
They drive their own trucks?
No, well, yes and no.
Okay.
and want to use my equipment. And, you know, I pay them, then at the end of the year, we issue 1099, so far.
Okay, and I'm not gonna tell you that you're wrong, I'm just gonna tell you to be careful and try to make sure that you're on as solid a ground as you could possibly be. The criteria are all over the map. One of the clear criteria that's always been there is well, first of all, if you provide supervision, if you provide a place for that person to work, if you give them the tools that they need to do their job. These are all indications that they're an employee and not an independent contractor. If on the other hand, you say, you get to work for the workplace in your vehicle, you use your tools to do the job, and you tell me how it turns out, all you've done is given them an assignment, then that probably meets the test of being an independent contractor, especially if they happen to be working for other people at the same time. It's all over the map. Scary stuff. Yes, ma'am.
So could you play with the guidelines and say, because they are using his equipment, and can you say that they're leasing the equipment and you charge them, say, whatever fee, but you have to up their contract rate to cancel out to make it go back to independent contractor status?
That might work, but again, it's just not clear. And you're in the spa business, which is kind of I would say it's its own industry in terms of whether people who are providing services in your location are operating as your employees or if they're operating as independent contractors. If they have a station and they're leasing that station from you, and there is a document that supports that, they're responsible for buying all their own supplies that they use in with whatever they're doing and providing massage services or anything else related to the spa activities, then probably you're okay. And I think there's another reason that I say that, and that is it seems like that and we have a beautician or a barber here somewhere. Is she here tonight? That's an industry that seemingly has been blessed by the Texas Workforce Commission as being one that typically uses independent contractors in connection with the way that business is done, especially when there are stations that are being leased, where everybody's supplying their own materials, they have their own clients, they may have an individual in the facility that's making appointments on behalf of all the clients that are being served by that facility. But that's okay. That's an accommodation more than anything else. But in terms of the gardening business, and certainly in terms of restaurant operations, it's probably much more likely that people that work there or in those activities would be considered to be employees. Okay. One of the things that I want to touch on here as far as the sales force is concerned, and then we're probably going to have to start skipping through some of this other information, because we are getting close on time. It has to do with how people are compensated. And earlier, we heard a story that was like something out of Halloween or something. People turned on their employers and turned on each other, and had chaos reigning supreme. But I think it's really important when you talk about how you compensate people is to think about the relationship between what somebody does and the value that they provide to your organization. I think it's extremely important that everybody receive a fair wage for what they do. The challenge is figuring out what's fair. And if you have multiple employees, that's even more challenging, especially if they know what everybody else is making. Because fairness is in the mind of the beholder. And so it's a very difficult area, but I think it's one that clearly if you're going to have employees, even if you're gonna have independent contractors, you have to be able to satisfy yourself that the relationship that you have with that individual is one that is a mutually beneficial arrangement. And that means probably some level of discussion going in, unless you happen to have access to a pool of workers out there that are, shall we say, have roughly identical skills. And you can say, well, you know what, if you don't like what I'm offering you for this particular job, I know I can get somebody else to come in and do it for that kind of money. If that's the situation you're in, then certainly that's well within your prerogative to have those kinds of discussions with prospective employees. But I think it's much more meaningful to really be able to try to have a dialogue that gets to the essence of what that employee is going to be doing for your organization and how much value they add to the organization at the end of the day. If you have employees who have expectations about benefits, that's a topic that also has to be addressed, I think. Some people might feel that, you know, I could get a job here and there are no benefits. I could get a job down the street and there are benefits. And they may be more persuaded by benefits than they are by the actual compensation. So it's really important to try to find out what somebody thinks is important to them. That's not as much a matter of accounting as it is a matter of common sense, I guess, but ultimately it feeds into the accounting record. If you have a benefit program, you have to be able to keep track of it. And that involves a lot of detailed record keeping. Any business is going to have probably a laundry list of various kinds of operating expenses, and each one of these is something that really needs to have the appropriate level of visibility and information that facilitates the recording of the expenses in the proper categories. Especially when it comes to something like insurance, which is, this is probably about page 5 of this handout that I gave you. Under other costs of services, insurance is a topic that sometimes is I won't say ignored, but it's kind of swept under the rug. People, when they're especially if they're in a business that is still in its early growth spurt phase, and there's a tendency to look at what might be just the essentials of that particular business. There's a tendency to overlook the need for insurance coverage. And that is something that if I have the opportunity to advise somebody, would say, do not underestimate the importance of insurance coverage. Talk to an independent insurance agent, somebody who's in the business of advising people on a day-to-day basis. Tell them what you're doing and let them tell you what they think your levels of insurance coverage should be. Most likely they're going to tell you more than what might be the bare bones minimum, because they get paid for selling insurance. That's what they do. So there's a certain element of bias in what they say. But nonetheless, they should have knowledge of what's out there that might be appropriate for your particular circumstances if you tell them what you're doing. And I'm not talking about going to your auto insurance agent or somebody who may be selling you your homeowner's insurance. I'm talking about going to somebody who is in the business of selling business insurance, and tell them your story and get some feedback from them. Just like if you came to me and you wanted to talk about your business issues, I would want you to tell me everything there is to know, for me to know about your business, so I can respond based on my breadth of knowledge and experience, whatever that might be. So the same thing is true when you're talking to an insurance advisor. Very important thing, so often overlooked, and it shouldn't be. Sometimes it gets down to an affordability issue. And when you get to that point, then you look at trying to assess the degree of risk that you have with the degree of comfort that you want to have when you go to bed at night. And one of the things that I think we've all experienced with insurance is we've paid insurance premiums for a period of time, but we didn't have any claims, so we just wasted a whole bunch of money. But that's not the way it works. We pay for that peace of mind that we have, knowing full well that if we do have a claim, it's going to be covered. And if we don't have a claim, well, thank you, just the same. Okay, we're heading down the home stretch here, folks. I've skipped over a lot of this stuff. Now, if you see something on here that you want to talk about, by all means, let's talk about it. But if you want to move on, let's talk to a certain extent about the kinds of accounts that should be established with your particular business. And I think the first thing I want to emphasize is there's no such thing as a prescribed list. There are categories of assets, or categories of and classifications of things that appear on your books that have significance. There are asset categories, there are liability categories, there are equity categories, revenue categories, and expense categories. And I'd like to just touch on each one of these categories. Again, this may be something that's fairly well ingrained in you already. And if I'm covering something that's really elementary, then we hopefully can move past that real quickly. But assets, as far as your financial records are concerned, represent things that you have. Your most important asset is cash. If you don't have cash, there's a saying that says when you're out of cash, you're out of business. So it's really important to know how much cash you have and have an accounting process that gives you that information as accurately and as timely as possible. Other things that might be considered to be assets of the business might be things like if you have an office, you might have some tables and chairs in there. Those are assets of the business. If you have a business that's selling product, that inventory is an asset of your business. If you sell your product or service on credit, you bill your customers at a later time after the rendition of the service or after the sale of the product, then what that customer owes you for that particular product or service represents an asset of the business. If you make advances, loans to your employees with the expectation that they're going to repay you, sometimes this happens. It's not a practice that I necessarily encourage, but I know that it comes about from time to time. Then those loans that you've made to your employees become assets of your business, and they should be recorded as such. Those are some of the ones that immediately come to mind. But anything that represents a thing of value that your business owns is an asset of your business. And under most circumstances, it probably should be recorded as such. It's not always true, but as a general premise, it should be recorded and recognized as an item of value that your business owns. Liabilities, on the other hand, represent those claims that other people have against your business. One of the most common things would be the amounts that you owe to your vendors for products or services that have been provided that you have not yet paid for. Another common thing would be if you have borrowed money from your local or national or international banking institution and recognize that borrowing as a liability that has to be repaid in accordance with the terms of the borrowing. certain items that might be liabilities that would not necessarily be recorded, depending upon how you keep track of things. If you have a workforce and you're in the middle of a pay period, let's say you pay your employees every Friday, and you're trying to determine what your liabilities are on Wednesday, you might not have a recorded liability for that payroll that you're gonna make on Friday, but you certainly have an obligation. And it would be a good idea to have some means whereby you can determine with reasonable accuracy what that liability is. Not that you would necessarily record it, but from a management standpoint, to know where you stand in terms of your obligations as of any given point in time. The ability to do that really gets back to the process whereby you keep track of your employment records and time records and everything else that goes into how you compensate your people. The difference between what you have in assets and what you owe in liabilities is considered to be the equity of the business. And that equity, generally speaking, is going to be reflected in two areas of your accounting records. One would be in the stakeholders' capital, and that means whoever the owners of the business are, who presumably have contributed resources to the business for the purpose of that business operating. Those contributions would be captured and recorded as stakeholders' capital, whether it be proprietor's capital, whether it be member capital if you're an LLC, or whether it be shareholder capital if you're a corporation. But there would be a place where those capital contributions would be recorded, and they're essentially there as a permanent record. They don't change much from one year to the next. The other area where the net of the excess of assets over liabilities, or the excess of liabilities over assets would be reflected, would be in something called retained earnings. If there's more liabilities than there are assets, then that's not retained earnings, it's accumulated deficit. I intentionally did not put that term on my outline. That's a bad thing to be thinking about, except if you happen to be the federal government. Then there's a huge deficit that nobody can even fathom how much the federal deficit is. But this is not federal accounting. This is business accounting. Revenues would be the category of accounts where you would capture the amounts that you have collected or you expect to collect from the sale of goods or services. Expenses would be the category where you record those expenses that result from the expenditure of resources in the day-to-day activities of your business. If you're expending resources on property that has a long life, like a vehicle, or furniture and fixtures, or computers, or anything that becomes part of your business that is going to be used over a period of time, that would not necessarily, and it would typically not be expensed, it would be recorded as an asset. Okay, I've got two sample charts of accounts that are part of this handout. I don't really want to spend a lot of time talking about these charts of accounts because there's so much detail there, but mostly what I wanted to do was to provide this as an illustration of what kinds of accounts a business might have. In one case, and I'm not trying to play favorites, but it just happened to have access to a sample chart of accounts for a restaurant. And so here is a couple of pages that break out various kinds of assets, liabilities, capital, revenues or income and expenses for a restaurant business. One of the things that I do want to point out, and emphasize is that when you have an accounting system that's, whether it's a computerized accounting system or whether it's a hand-prepared accounting system, it's really important to assign account numbers to each of the account descriptions that you have that becomes part of your bookkeeping system. And it's not because I'm a numbers guy that I'm telling you this. It's because by having an account number, that gives you the ability to indicate on a source document, let's say it's an invoice that you have paid. You indicate on that invoice that you paid that invoice on such and such a date with check number such and such, and that transaction needs to be recorded in, I'll just pick one, go to page 2. It needs to be recorded in account 511, uniforms and laundry. So that at that point in time, the source document that you have, the invoice from your vendor, has all the information on it that's gonna match up with what goes into your account. So that there's a trail that starts with that original source document. It goes through the actual physical payment of the bill and into the accounting system, so that anybody could then go back and let's say they start with a point of reference, which happens to be account 511 on the general ledger, on the bookkeeping system. They see that there was a payment made to Universal Linen Service for uniforms. They go back to the vendor file for Universal Linen Service, and what do you know? There's the invoice for that exact amount. That's the kind of trail that you want to be able to establish with respect to every single transaction that occurs. And the only way you can really do that is by keeping track of your account classification by account number. We have in the past had a client that used QuickBooks to keep track of their business activity. QuickBooks is a great tool. I recommend it highly. But like any tool that's available out there, it has to be used with a certain discipline. In their particular situation, they set up their QuickBooks without consulting with us, and I'm not sure they actually consulted with anybody. And they did not assign account numbers, and you can do that. You can actually set up a general ledger system on QuickBooks and not assign account numbers. So the only way that you can really tell the system what account you want to put something in is by giving it the actual verbal description. And one of the things that QuickBooks does, and I think a lot of applications do this, is they read your mind. And then all you have to do is type in the very first letter of whatever that description is, and it will tell you that you have selected a particular description, even though that may not be the one that you selected. So if you have like 4 accounts that all start with the letter A, and you intended for it to be the 3rd account that starts with the letter A, the system will assign it to the 1st account. So right then and there, you've got a coding error, you've got an accounting error that's going to have to be investigated and sorted out. But if you have a numeric system that goes along with that, the numeric system is the default. And so when you record a transaction, you put it into, you say, I'm going to record that in account 511. That's where it's going to go. So that's the main thing I want to mention as far as account numbers are concerned. The array of accounts is particularly representative, I think, of a medium-sized restaurant operation. I don't think we need to necessarily take up the group's time to talk about some of these. I'll be more than happy to try to answer any specific questions. The second of these charts of accounts that I passed out have to do with a law firm, which for many purposes is similar to most service organizations. the activities that are represented by these various accounts here. And by the way, you may notice that the account numbers for this law firm are 4-digit numbers, and the account numbers for the restaurant organization are 3-digit numbers. That just happens to be the way they're illustrated. You can select account number sequences by probably anything from a 3-digit number to something that would go up to 8 or 10 digits. The more numbers you have in the account number, the more complicated it gets in terms of how you record things. But anyway, the one thing I guess that I would like to point out as far as the law firm chart of accounts is concerned is that they here talk about equity in 3 different categories. I don't think they do that on the restaurant. No, they don't. They just mention common stock and partners or proprietors capital. But over in the example of a law firm, they actually break down the equity sections in 3 different categories, which are typical, I would say, not necessarily law firms, but a lot of service organizations. The organization might be a partnership or a limited liability partnership. It might be a limited liability company. It might be a professional corporation, or it could even be a proprietorship. So these are all different kinds of entities that can be utilized in the establishment and the operation of a business. I think that the question in most of your cases probably has already been answered, because you've already established your business entity and you've been operating for a while. One of the questions that we frequently get as score counselors is, what kind of entity should I select? Should I be operating as a limited liability company? Should I be operating as a proprietorship? Should I be incorporated? What should I do? And the default answer is talk to your lawyer. But the practical answer is, and I think that we at SCORE are certainly qualified to talk about the practical aspects of how do you select an entity, and that is to try to think about what your potential exposure is to lawsuits and third-party claims. If you have a business that is relatively safe, it's a white-collar type of business, people work in an office environment, the chances of somebody getting hurt on the job are relatively low to begin with, and even if they do get hurt, there's probably going to be some kind of a mandatory workers' compensation coverage that would be involved. The facility itself does not have a lot of traffic that comes from outside. You don't operate in a situation where you've got a stream of customers that are making their way through your facility on a day-to-day basis. So the risk of somebody being injured on your premises is probably relatively low. The risk of you doing something on behalf of a client that turns out to cause them some sort of an injury, and people in my profession, for example, are not immune from lawsuits for malpractice. Doctors certainly are not immune from lawsuits for malpractice. Lawyers even get sued for malpractice occasionally. So these are things that might influence how you set up your business as an entity, because there are certain kinds of entities, limited liability companies and corporations certainly come to mind, where you can protect your personal assets from third-party claims by using the business entity as the face of your business in its relationship with the public. That doesn't necessarily protect you as a shareholder of that business from all claims that might arise, but it certainly reduces the possibility that you're going to end up subjecting your personal assets to claims from third parties. A proprietorship does not insulate you from any claims anywhere. A general partnership typically does not. A limited partnership might, in that particular situation, limited partners are generally considered to be exempt from third-party claims, but the general partner is not exempt. And that leaves regular corporations as being probably the most common entity that's selected for protection against third-party claims. Overarching all of that gets back to my point about insurance. If you can find a way to insure yourself against a risk for a reasonable price, that's probably something you should do regardless of whether you're operating as an LLC, a limited liability company, or a corporation, or however you're operating. Because I think we all want to be in a position where if we have an obligation to a third party because of something that we did to them, we want to try to make them whole. And that's what insurance is for. And that's where I think the common sense aspect of insurance coverage really comes into play. If you ever find yourself in a situation where truly you're responsible and you have the insurance resources available to do exactly what you want to do, and that is to make that other person whole. I'm done. Any questions?
It's been very informative. Thank you.
Very, very